Tesla continued to boost production and sales, producing 936,172 units in 2021, above estimates of over 900,000, a major increase over the 509,7737 cars shipped in 2020, even as chip shortages hindered production across the automotive sector. On January 3, a day after the company announced record Q4 deliveries, Tesla's shares increased by 13. When it opens plants outside of Berlin and Austin, Texas, in 2022, Tesla plans to greatly expand its manufacturing capacity. Will 2022 be even better for Tesla than 2021? Discover how much Tesla may earn in this exciting year of 2022 in our video today. It's possible that the lack of chips hindered Tesla's given the surge in manufacturing and the reduction in output by many other manufacturers. Tesla had significant pricing power and was able to raise prices multiple times in the United States in 2021, which helped to increase profit margins. The chip crunch seems to be getting better. According to top vendors, global automakers are only now starting to increase output and inventory from low levels. In the long run, however, chip supply could begin to normalize. Recent years have been incredibly fortunate for tech icon Elon Musk and his company Tesla, which is the leading electric vehicle manufacturer displaying significant growth, and the world's largest automobile manufacturer by value is offering a similar reward proposition. The primary drivers of the stock's increase in 2022 are the following. Since May 2010, there has been a bullish trend on the Tesla charge. The company's predicted growth potential has been confirmed, and further growth is anticipated in the upcoming year. Tesla remains one of the most divisive stocks on the market and has increased in 2021 despite Elon Musk's recent withdrawal from selling shares, a second investigation into its solar business, and possibly some plain old profit-taking. Tesla is anticipating a busy 2022 as it plans to open new locations and introduce its highly anticipated electric truck. However, some critics argue that the company's high valuation and the numerous investigations into the safety of its driver assistant feature are reasons to remain cautious with the stock, as they believe that the company's success in 2022 will depend on a number of significant catalysts that would occur throughout the year. With an eye-opening valuation, expectations are already elevated. Giga Berlin is scheduled to debut in early 2022. Some industry watchers forecast that 2021 would mark Tesla's milestone of 1 million deliveries. Tesla, like the rest of the auto industry, Tesla has encountered supply chain challenges, but it has overcome these obstacles. And we now know that the company handled the global chip shortage fairly well so far. According to Michelle Curbs, an analyst with Cox Automotive, Tesla has done an incredible job mitigating the chip shortages and other supply chain issues that automakers were facing this year. No other competitors have even come close to threatening Tesla's sales, but that is the question moving forward in response to the global auto shortage. Since the Build Back Better plan includes a $7,500 to $12,500 refundable tax credit for the purchase of a new electric vehicle, if the Build Back Better plan is approved with the electrical vehicle subsidies included as proposed, Tesla will most likely receive significant assistance from the U.S. government in order to restore the federal electric vehicle tax credit in 2022. This is especially likely to happen early in the year. It will be important to monitor Tesla's capacity to maintain pricing and volume throughout the year, particularly now that the Model 3 and Model Y are no longer fresh to the U.S. market. The launch of the Model Y mid-year, which was not anticipated to be offered in Europe prior to the opening of Giga Berlin, is also helping Tesla's 2021 European agreements. In September, automotive market analysts at Jeddo estimated that Tesla's Model 3 will surpass non-electric vehicles as the best-selling car in Europe. Tesla later altered its thinking and is now importing certain models from China, which will aid in decreasing costs and gaining market dominance in China models for substantiation. We all know that the availability of charging stations is crucial in enticing customers to choose electric vehicles over gasoline or diesel engines. So Tesla surpassed its rivals to lead the global electric vehicle market, accounting for 14.55% of all electric vehicle sales in the first half of 2021. Tesla also reported a 49% increase in the number of supercharger stations it has deployed, rising from 2,181 to 3,254 in the third quarter. Tesla also unveiled its odd-looking electric truck 2 years ago, well ahead of other automakers' announcements of their plans to produce electric trucks and SUVs, the kind of vehicles that American consumers have been promoting for years. Although the truck's volume production is expected to start in 2023, behind schedule, it won't matter. The company has already received over 3 million orders for its Cybertruck even before it launches. And once it does, it will cause a massive storm in the automotive industry. According to analysts cited by Fact, the Wall Street Census projects a profit increase of more than 40% in the upcoming year, with revenues expected to rise at a similar rate to $73.2 billion from an expected $51.7 billion. Additionally, it is anticipated that Tesla will sell nearly 1.5 million vehicles in 2022, as opposed to expectations of about 900,000 vehicles in 2021. We must all agree that Tesla will profit from the development disproportionately because the business is actively investing in establishing significant additional capacity for the manufacturing of electric vehicles. But we also think that by 2025, the shift will occur far more quickly than 10%. By 2024 to 2025, automakers will go to tremendous measures to convert their capacity to produce gas-powered vehicles to electric car manufacturing. This will have a big impact on Tesla's stock values in the coming years. Musk posted a poll on Twitter on November 6, asking if he should sell 10 shares of Tesla. Musk said he would follow the results of the poll, which showed that 57.9% of the 3.5 million respondents said yes. Filings with the U.S. Securities and Exchange Commission (SEC) revealed that Musk started selling large amounts of shares in November and continued to do so into December, despite having exercised options to purchase shares during the COVID-19 pandemic. Among growth investors, the major electric vehicle maker Tesla is still a well-known stock. Tesla's stock price has risen by 95.5% from the start of 2020 and by as much as 76% at its highest points thus far. On the other hand, after the stock hit an all-time high of $12.29 in November of 2021, it has decreased by 25%. Presently, Musk, who has been trading Tesla shares for several weeks, announced in a late November tweet that he would present an updated product roadmap at the company's anticipated late January fourth quarter call. He began by referring to 2021 as the year of the supply chain nightmare, and he didn't stop there. The share price has dropped below $1,000 due to heavy stock sales, and this month's wider financial markets have also lost value as a result of rising inflation and signals from the U.S. Federal Reserve that it will expedite its plan to hike interest rates 3 times next year and start to taper off its asset holdings in January, even if the 25 are sliding from highs. The Wall Street Journal reports that as of December 16th, Tesla's trailing 12-month price to earnings per share was 300.13, while the S&P 500 index averaged 28.65. This indicates that if the market sell-off continues, the share price may decline significantly. Tesla's value, which was pegged at $1 trillion in October, only dropped below that amount, and the company entered its third bear market of the year, which is defined as a loss at the closure of at least 20% from a peak. According to Bill Selesky, an analyst at Argus Research, we have a company that is expanding. And since Tesla will ultimately have the largest market share until 2027, they merit a premium valuation. He went on to say that it will be a better year than 2021 since it all comes down to demand. According to him, Tesla is not only the most valuable car manufacturer in the world, but it is also more valuable than the next 5 biggest manufacturers. Tesla has seen fewer supply chain delays than the GMs and Fords of the world. Combined to imply that a large portion of future performance is determined by the market would be an understatement. This suggests that Tesla is so far ahead of the competition in terms of technology that they will never be surpassed. What are your thoughts on Tesla's financial goals for 2022? Please leave a comment below.